Warren Buffett, the chairman and CEO of Berkshire Hathaway, is one of the most successful investors in the history of finance. With a net worth that has consistently placed him among the richest individuals in the world, Buffett's journey to immense wealth is a fascinating tale of discipline, insight, and smart decision-making. But what is the secret formula behind his success? How did a boy from Omaha, Nebraska, go on to become the Oracle of Omaha and one of the wealthiest people on the planet? In this article, we will explore the principles, strategies, and mindset that have fueled Warren Buffett's legendary career. From his early influences to the investment strategies that have shaped his fortune, we will uncover the secrets behind Warren Buffett's success. If you're looking to understand how the world's richest man amassed his wealth, this guide will reveal the formula he has followed for decades. The power of value investing, building wealth with fundamentals. At the core of Warren Buffett's secret formula is a concept known as value investing. This philosophy, rooted in the teachings of his mentor Benjamin Graham, is about buying undervalued stocks, companies whose market prices are lower than their intrinsic value. For Buffett, the goal is to identify businesses that are trading for less than their true worth and hold them for the long term. Key principles of value investing. Buffett emphasizes understanding the true value of a company, which goes beyond its stock price. Intrinsic value is derived from a company's fundamentals, such as its earnings, growth prospects, competitive advantage, and overall financial health. This concept is borrowed from Graham. It refers to purchasing stocks at a price significantly lower than their intrinsic value, which offers protection if the company doesn't perform as expected. Rather than seeking quick profits, Buffett invests in companies that he believes will provide consistent returns over many years. He famously says, "Our favorite holding period is forever," emphasizing the importance of long-term thinking. Buffett's value investing strategy helped him build wealth over time by acquiring undervalued stocks and waiting for them to appreciate as the market corrected its pricing errors. By staying focused on long-term performance and not getting swayed by short-term market fluctuations, he has outperformed many investors who follow trends or chase speculative opportunities. The importance of quality businesses, focusing on strong companies. Warren Buffett doesn't just buy any stock. He buys companies that have durable competitive advantages, also known as economic moats. These companies have the ability to fend off competition and continue to generate consistent profits. Buffett looks for businesses that dominate their markets, have strong brand recognition, and are run by competent ethical management teams. Some of the businesses that fit this description are companies like Coca-Cola, American Express, and Gillette, icons of consumer goods with loyal customers, efficient operations, and strong market positions. Buffett's criteria for investing in a business. Buffett prefers businesses that he understands inside and out. This is what he calls staying within his circle of competence. He does not invest in companies or industries that are too complex or outside his scope of expertise. Buffett looks for companies with strong brands and market dominance. For instance, Coca-Cola's global reach and brand loyalty made it a key investment for Buffett. Businesses that can consistently generate revenue and profit are the bedrock of Buffett's portfolio. He seeks companies that have a proven track record of financial success and the ability to weather economic downturns. Buffett places a high value on management. He invests in companies run by leaders who are trustworthy, intelligent, and focused on creating long-term value for shareholders. By focusing on businesses that have these qualities, Buffett has been able to make investments that not only weather market volatility but also thrive over the long term. The power of patience. Why time is Buffett's greatest asset. One of the biggest secrets to Warren Buffett's wealth is his ability to be patient. In a world obsessed with instant gratification, Buffett's success is built on the simple but powerful idea that time is an investor's greatest ally. Buffett's long-term investment approach is perhaps his most distinguishing characteristic. While many investors are quick to buy and sell based on market fluctuations, Buffett is in it for the long haul. Buffett's famous quote, "The stock market is a device for transferring money from the impatient to the patient," sums up his mindset. He doesn't panic when the market dips or when a company experiences a temporary setback. Instead, he uses volatility as an opportunity to buy high-quality companies at discounted prices. This patience has allowed him to benefit from the power of compound interest, where the returns on his investments multiply exponentially over time. By holding on to stocks for decades, Buffett has allowed his investments to grow without the distractions of short-term noise or market swings. The role of reinvesting. Building wealth through compounding. Buffett's formula for wealth isn't just about picking the right stocks, it's also about reinvesting his profits in dividends. When a company generates earnings or dividends, Buffett doesn't take them out as cash or pay them to shareholders. Instead, he reinvests that money into other profitable opportunities, thus allowing his wealth to grow at a much faster rate. This reinvestment strategy, known as compounding, allows Buffett to benefit from exponential growth. The more money he reinvests, the more money he earns, which in turn accelerates his wealth creation. This strategy has been a key component in Buffett's success. By continually reinvesting his profits, he has been able to scale his wealth rapidly over the decades. His commitment to compound interest is another reason why his wealth continues to grow, even as he nears his 90s. The wisdom of emotional control, avoiding panic and greed. Another secret to Warren Buffett's success is his exceptional ability to control emotions. While most investors are driven by fear or greed, Buffett remains calm and rational in the face of market volatility. Whether the market is soaring or crashing, Buffett sticks to his principles and doesn't let emotions cloud his judgment. In his annual letters to Berkshire Hathaway shareholders, Buffett frequently advises investors to be fearful when others are greedy and greedy when others are fearful. This counterintuitive advice reflects Buffett's contrarian approach to investing. He looks for opportunities when others are panicking and sells when the market is overly optimistic. This emotional discipline allows Buffett to avoid the common pitfalls of investing, chasing hot stocks during bull markets or selling in a panic during bear markets. By keeping a level head and making decisions based on logic rather than emotion, Buffett has been able to outperform most investors over time. Learning from mistakes. The importance of humility. While Warren Buffett is known for his incredible successes, he has also experienced his share of failures. However, one of the secrets to his success is his ability to learn from his mistakes and continuously evolve as an investor. For instance, one of Buffett's biggest mistakes was investing in a company called Dexter Shoe in the 1990s. The company seemed like a great investment at the time, but it ultimately failed. Buffett later admitted that the $400 million loss from this investment was one of his greatest blunders. However, instead of letting this failure define him, Buffett used it as a learning experience and continued refining his approach. Buffett's humility and willingness to learn from his mistakes are what separate him from many other investors. He doesn't let failure stop him from moving forward. Instead, he uses it as an opportunity to grow stronger and better equipped for the future. The role of long-term partnerships. Building trust and collaborations. Warren Buffett has also made his fortune by forming strategic partnerships, particularly with his business partner, Charlie Munger. Munger, the vice chairman of Berkshire Hathaway, shares Buffett's investment philosophy and has been instrumental in shaping many of the company's key decisions. Buffett's relationship with Munger is a key example of how partnerships can lead to success. By teaming up with someone who shares his values and approach, Buffett has been able to leverage Munger's wisdom and insights. Together, they have built a culture of trust, integrity, and long-term thinking at Berkshire Hathaway, which has been a driving force behind the company's success. The timeless wisdom behind Warren Buffett's wealth. Warren Buffett's rise to wealth is not the result of luck or short-term speculation. The secret formula to Warren Buffett's success isn't just about picking the right stocks. It's about developing the right mindset, maintaining discipline, and staying committed to long-term growth. In the end, Buffett's greatest secret is that there is no shortcut to wealth. It's about making smart, principled decisions day in and day out and allowing time and compounding to do the rest.